Okay, everybody, thank you for joining us. I'm Lloyd Silver from Gateway, and we'll be kicking off our webinar right now. Title of this webinar is The Secrets to Selling Single Premium Life. So I've said this in some of the emails you may have seen. This is what I believe the easiest life insurance sale you'll ever make. It is truly a simple sale, and it solves a major need that our clients have. And I'll be getting into a lot of detail over the next 15 or 20 minutes. Now, despite this being a simple sale, in solving this amazing need, I'm shocked at really how few independent agents are actually out there talking to their clients about this concept. And I stress independent agents because the bank reps are out there talking about this constantly, and they are generating millions and millions and millions of premium every single month talking about this very simple concept. Yet the independent agents are not making the phone calls and talking to their clients and letting them know that this actually exists. So my challenge to everybody here is, let's not have the bank reps out there talking to your clients when you can be having this conversation yourself. Nothing against bank reps, but most of our advisors are on the independent side, and we want you guys to be successful and not lose sales and lose clients to folks that are not necessarily focused on life insurance day in, day out, but they just happen to have a easy conversation with a client who walks into a branch or otherwise they get in contact with. So again, we'll be taking about 15 or 20 minutes. At the end of that time period, I'll open up for any questions. It's a very simple concept, but we will go over some of the finer points to make sure that you guys have this concept down pat. So once again, what I'm talking about is single premium life insurance. Now, this is not necessarily a new concept. Single premium life has been around for a long, long time. In fact, because it was so popular and so effective in the late 1980s is when all the tax changes came about that created a modified endowment contract. And that was really because of single premium life. People were putting a ton of money in these policies because they were earning an amazing guaranteed rate of return. And again, it was so popular and so effective that the IRS decided to put an end to it, and they created the rules surrounding life insurance and putting too much money into policies and creating modified endowment contracts. So today we don't use single premium life in that exact manner. We're not using it, for instance, for supplemental retirement plans because of tax implications. But there are some fantastic uses that we're going to go over today. So in this webinar, we're going to talk about a couple of things. First of all, we'll talk about the use of single premium life today, specifically creating wealth, protecting wealth, and transferring wealth. And then once we go over that, I'll talk a little bit about the underwriting process because I think that's absolutely key to this concept, who the ideal target market is. And just to give you a little heads up, it's going to be the senior market. So anybody working with senior clients, this concept is going to be perfect for. And then we'll talk a little bit about how to get more information and particularly our CapTran software that you can use to demonstrate this concept to your clients very quickly and very effectively. So let's start off with creating wealth. And that is probably the number one use of single premium life today, is creating wealth for the next generation or next generations in terms of giving some kind of inheritance to not only their children, but their grandchildren and their great-grandchildren. So I really love this on the left-hand side of the orange box. How do you turn $50,000 into $95,240 for your loved ones in less than 10 minutes? Honestly, this process takes about 10, maybe 15 minutes tops from the beginning of the sales conversation to you're actually on the phone with the carrier and getting this case approved. Now, I'm not talking specifically, or I'm not going to mention specifically what carrier I'm talking about today, and that's simply for compliance reasons. What I'm talking about is a specific product that we can share with you. There are other single premium products out there as well. We have several of them available, and they all meet different needs. But there's one in particular that we really love for this concept that I'll be speaking of. But again, for compliance reasons, I'm just not putting the actual name of the carrier out there, but we can share it with you right after the webinar. That's not a problem. So in this particular example, again, if we take $50,000 and we put it into the concept, for a female age 65, it creates over $95,000 of immediate death benefit. And for a male, obviously, a little shorter life expectancy, not quite the same death benefit, but we're still getting over $85,000 of death benefit immediately once the policy goes in force. So this is a fantastic way of actually creating some wealth here. Benefits for your clients. Now, we talked about the issues regarding taking money out of the policy and some of the tax issues surrounding that. But the tax, there is tax deferred growth in this policy, and there is a guaranteed rate of return. Right now, that guaranteed rate of return is 3%. So again, there's some tax issues, but we're getting a tax deferred rate of return, and it's a fairly high rate of return when we compare it to things like CDs that are actually earning 1%. So while it might not be ideal in terms of using this as a cash accumulation vehicle, I certainly would not sell it as such. If they actually needed access to cash down the road, it will provide some of those benefits. Now, if they take the money out of the policy, there are tax repercussions, but they can annuitize it. That's one way of avoiding some of these tax issues. And the annuitization is built into the policy. So they decided that they actually needed to benefit on a monthly or annual basis from the proceeds that are in this policy. They can do so by annuitizing it and getting that guaranteed income for the rest of their life. That's built in right from the beginning. Now, protecting wealth is another big issue here, and I think this is incredibly important today when most of our clients are actually still very nervous about stock markets and losing money. Once you get money, you don't want to lose it, and I think they're willing to give up a little bit of rate of return for the safety and security that comes from products like this. When I talk about safety and security, one very important thing to keep in mind is that their principal is absolutely guaranteed with this product. There are surrender charges if they do partial surrenders. However, if they do a full surrender, their principal is always guaranteed. So whatever they put in the policy on day one, whatever that premium is, they can always get that money out by surrendering the policy. So just like a CD, and again, we don't try to compare life insurance and CDs and other investments. We start getting into issues by doing that, but we do have to make some comparisons sometimes. And this is one feature that I would really emphasize, which is that they can always get their money back. There's no issues with that whatsoever. Interest rate is locked in for 1 year, and again, that guaranteed death benefit. This is life insurance. We are selling it as a life insurance policy. We're not trying to suggest that it's not. This is life insurance. If they don't have a need for life insurance, this might not be the right product for them. But if they do, there's some fantastic benefits that we can offer in addition to just the death benefit. Clients retain access and control. So we talked about the fact that they can actually get all their money back with no downside immediately upon the policy going in force. But they can also take out some money on an ongoing basis. And this is very similar to a lot of annuities out there. After the first year, they can take 10% of the account value out without any surrender charge. There's also loans that they can use. They're fairly low-cost loans in the first 10 years. It's a 2% net loan rate. The loan rate's 5%. They get a 3% crediting. So it costs them 2% if they want to take out more than that 10%. And again, this is designed for the senior market. So there are some benefits. For instance, if they're in a hospital and it qualifies as a medical stay, there are a waiver of those withdrawal charges as well. So if they need access to the money for medical purposes, this is one of a couple of ways they can get the money out and not have to face any type of surrender charges. And again, not trying to overly compare this to CDs, but CDs are going to be one area that you can really target in terms of getting money to put into these policies. And CDs do have surrender charges. So and it doesn't make a difference if you have medical issues. You're going to pay a surrender charge if you cancel a CD earlier. And so with life insurance, we actually have some benefits beyond just what they could possibly be getting from their CD investments right now. And this to me is actually really the key to this whole thing, which is the living benefits. One objection that you might get when you're talking to your clients is that while they may not need this money now, they don't plan on using it, they're still worried that something might happen to them. What if they become ill? What if they have to go into a nursing home, or what if they actually have to hire a nurse to bring in to their home? And so that could cause some people to maybe pause and not want to put aside money, even though they plan on giving this money to their kids or their grandkids. They're still concerned. They still want to hold on to it just in case something happens. Well, we solved that problem. Most of the time, that just in case does deal with health issues. So if the client is terminally ill, and that's defined as 24 months or less for life expectancy, they can get up to 90% of the death benefit out of the policy, no surrender charges, and they can take that money out immediately. Even if they're not terminally ill, if they can't perform two ADLs, that's activities of daily living, those include eating, toileting, transferring, which is with vehicles and getting from places from one to another, bathing, dressing, and continence. So they can't perform two out of these six, then they do qualify for this living benefit feature, which allows them, again, to take 90% of the death benefit out of the policy with a maximum of $250,000. So this really addresses that one big issue, which is, what if I'm sick? What if I have to go into a nursing home? What if I have to hire someone to take care of me? We've answered that problem. In fact, it's not just the $50,000 or $100,000 or $10,000 that they put into the policy. It's 90% of the death benefit that they can actually take out right away. As soon as they can't perform those two ADLs, they can immediately take out up to 90% of that death benefit, subject to that $250,000 maximum. So that's an enormous benefit. It's one way of getting a little bit of long-term care benefit in this. So, if you have clients that perhaps cannot qualify for a standalone long-term care policy, they may be able to qualify for this. So it's a way of not only transferring wealth to the next generation, but they can actually build up a little bit of a long-term care benefit that they can use for themselves. So it's really fantastic in that way. And we talked about creating wealth and protecting wealth. And of course, the last part is transferring wealth. And that's ultimately what this policy is designed to do. It's to transfer wealth from one generation to the next. And of course, just like any life insurance policy, we don't have to deal with probate, and all the income is received on a tax-free basis. And those are basics, but it's important to point out, because what we're often doing is taking money from different types of investments. And I heard a phrase the other day that I just love from Anthony Morris. He called it dusty money. And I absolutely love that term. It's money being set aside. It's not doing anything. It's just literally sitting around. It's not being used. It's collecting dust. So we're taking that dusty money and we're putting into a vehicle that can create wealth while protecting that wealth and transferring it to that next generation on an income tax-free basis and outside of probate. So those are all advantages of life insurance. But again, we're taking money out of CDs, out of annuities, out of IRAs to fund these types of things. So it's important to remember some of the benefits of life insurance that we have to offer. Let's talk about underwriting, because to me, this is the key to the whole process. This is what makes this life insurance concept so simple. It is literally a 10-minute underwriting process. It is so easy for them to qualify. They have to answer no to these 5 questions. And I will read these just to make sure everybody sees them or hears them. Has the insured been hospitalized or surgically treated within the last 5 years for heart disease or heart failure? Has the insured been treated within the last 5 years for cancer? Have they been diagnosed with or treated within the last 10 years for heart attack, stroke, mini stroke, vascular and circulatory disease, Alzheimer's, dementia, or an abnormal chest X-ray? Have they been diagnosed with or treated within the last 2 years for a hip fracture? And finally, have they been declined, refused, or turned down for life insurance? If they answer no to all these questions, then we can get them approved coverage within 10 minutes. And it is that simple. It is really that simple. All that you have to do is fill out a very short application and fax it in, or complete a form online. And actually what happens is the carrier will call you and your client within 10 minutes. They'll ask a couple of questions, and right away you've got approval, you can collect a premium, and that policy is going to be in force. Now, if they answer yes to one of those questions, they can still qualify for coverage, but they would have to go through a normal underwriting. In that case, this might not be the best policy for them, but that's pretty easy to qualify for. This is very simplified underwriting, and most folks that we sit down and talk to about this concept can answer no to all those questions, so they can qualify and get that policy in force within 10 minutes. There are maximum amounts of premium that can be accepted. Again, this is subject to this 10-minute simplified underwriting. So if you want to put more of the policy than what's on the screen, 50 to 59 is 100,000, and at the oldest ages it actually drops down to 40,000 for up to 85. But again, you can sell this to somebody who's up to 85 years of age. There is a limit to the amount of premium, but sometimes it's not easy to get life insurance on someone who's in their 80s. And as long as they can answer no to those questions, they can get approval within that 10-minute period. And you can get higher amounts with normal underwriting. And if we do normal underwriting, we might look at a couple of other options. I really love this concept for how easy it is to explain it to your clients and how easy it is to actually get it through underwriting. So again, you're with the client, you explain the concept, they say this is fantastic, you fill out a little fax or you fill out an online form, you sit around for a couple minutes. Literally, we had one the other day. In 3 minutes, the carrier called and said, congratulations, it's approved. You're authorized to collect a premium. The policy's in force once you get that premium. That's how simple this is. There are other single premium life policies that we have, but none are as easy to get in force as this one. I mentioned earlier, this is ideal for the senior market. That's who you're targeting for this. You're not going out there and selling people in their 30s and 40s. This is a perfect concept to talk to about with your senior clients. I guarantee that if you go out there and talk right after this webinar with 5 or 10 senior clients, you're going to walk away with 2 or 3 sales. This is such an easy concept for them to understand. And here are some questions that you can ask them to get them to really understand the benefit and the beauty of what we're talking about. First question, do you have money that you don't need, which has been set aside for loved ones? And again, that's that dusty money that we were talking about. They've got money, it's set aside for little Johnny. They want to give it to him in their inheritance. It's sitting around. It's in a CD. It's sitting in a bond somewhere. Probably a very low risk type of investment. They're not really thinking about it. They're going to give it away. So if they're going to give it to little Johnny when they pass, why not take that money and put into life insurance and almost double how much we can pass on to that next generation? Would you like that money to be transferred to those you care about income tax free? With other types of investments, there are tax repercussions. We have income, IRD, income in respect to the decedent. So there are income taxes that might have to be paid when that senior client of yours dies. That's not the case with life insurance. Are you interested in learning about a way to lower your taxable interest? Again, this is a tax deferred vehicle. We're not selling it for them to accumulate assets on a tax deferred basis and pull those funds out of the policy. But if they have money in a CD, for instance, they are getting a tax bill every year on that money. They are paying taxes on it. If they put into the life insurance policy, they don't have to pay tax on it, and they can almost double what they're giving to their kids or grandkids. Here's the key right here, and this is the number one question. Do you continually renew CDs, annuities, or have a large amount in a passport savings account? If you go out and ask that question to your senior clients and they answer yes, this concept is absolutely perfect for them, because that's someone who's got that dusty money. They are not using that CD. If anything, they're keeping it there because of the contingencies. They're a little bit scared, again, about the what ifs. What if I get sick? What if I need money to take care of myself in a nursing home? And we can solve that problem with some of the features that we've already talked about. So if you go out and you ask your clients that simple question, do you continually renew CDs, annuities, or have a large amount in passport savings accounts? And they say yes, this product is ideal. You can take a portion or all of those assets. They're not planning on using it. They're planning on passing those assets to their kids or grandkids or great-grandkids, and we can turn it into something more special and provide a benefit to them if, in fact, they do need it during their lifetime for some medical reasons. And the last question here is, do they have funds in an IRA that they don't plan on using, or are they now required to take a required minimum distribution? So if they have IRA funds, they're leaving the money in there, they have other funds they're using for their retirement. Again, this is a perfect opportunity to take some of those funds and create wealth and transfer that wealth to the next generation on a tax advantage basis. Here are the right clients. You're looking for folks between the ages of 60 and 85 who are looking for safety and guarantees. And I think, probably a large portion of people within that age group would say that they are looking for safety and guarantees. We talked about passbook savings accounts. So they have a large amount in savings. It's not doing anything. Those are ideal clients. Continually renewing CDs. Do they have accounts that are designated as in trust for or custodial accounts? And these are quite popular. So if they have an investment account and it's in trust or a custodial account for their child or grandchild, why not consider taking a portion of that, which we know they're setting aside for their kids or grandkids, and let's turn it into something a little bit more by using a life insurance product. Grandparents who wish to pass money to their grandchildren and downsizing their homes, right? So they're selling their larger home. They're going to move into a smaller home, maybe even an apartment. What are they going to do with the assets? They're going to walk away probably with quite a bit of equity in their pocket. Maybe they need that to retire on. But if they don't, or they don't need all of it, we can move a portion of those assets into this type of a product and provide that fantastic benefit. I am going to show an example of how this works in a second. Just so you know, we do have a microsite set up on the Gateway website. So you can go there, you can get more information on both of these products. You can also talk to Jessica at our office, and she can help you with those and answer whatever questions you have if we can't answer them today. What I'd like to do is show you a little bit right now about our CapTran software. And this will be the last piece, and then I'll open it up to any questions. So give me 1 second. Let me actually pull up the software here, and we'll show you an example of what we're talking about. Okay, I'm going to unmute just for 1 second. I just want to confirm everybody can see the CapTran screen now.
I can't see it.
You cannot see the CapTran screen.
I just have a black screen in front of me.
Me too.
Has it been black the whole time?
No, it came on very briefly.
For me too, it came, that little form it looked like came on, and now it's all black.
Oh, well, just had it a second ago.
And it popped away? Okay, no worries. I'll do it a different way.
Okay.
Do you guys see it now?
Yep.
Fantastic. Yep. Okay, perfect. So this is software that we have available, no charge, of course, and it is specifically
designed.
Any
larger?
Like that?
Sorry. The print is very small.
Yeah, I just made it larger. Can you see it?
No, it's just still very small.
Does it look a little bit better now?
No change.
No change at all. That's interesting. On my side, it's much bigger.
Okay, well, go ahead. I'll just get better eyes.
Mine says account ID and then first name, last.
Okay, you know what? I just hit that little button, actual size, and it came up.
Hold on 1 second. All right, now how's it look?
Right. I can see everything.
Okay, now do you see where it says CapTran main menu?
Yeah.
All right, so
now.
yeah, no, I was showing you guys the wrong screen, so now we're all back on track here. So now this is our CapTran software. It's available from us, obviously no charge. It's specifically designed to show this concept. Now I will tell you that the newest version, we had to take the annuity portion out. So You can still show moving money from a CD to life insurance and also from an IRA to life insurance. And I'm just going to spend a second showing CD to life insurance so you can really see how powerful this is. So it's a real simple concept to use. You just simply put in the name of the client. Frankly, this I don't think makes a difference at all. Not when you're using the particular product that we're talking about. You just put in their age. I'll go ahead and put in somebody who's 70. How much money are they going to be taking from that CD? We'll just put in $50,000. What's their tax bracket? I'll put 40% with a 1% rate of return. That's about what CDs are getting today. And that's really all that you need to do. I'm going to click on this box. It's kind of tough to see, but it says Simplified Life Policy. If you click that, it actually is going to pull the rates of the product that we've been talking about so that you don't have to guess in terms of how much life insurance is going to be purchased. All you need to do is click that box, and those rates are automatically pulled into the program. So now we'll calculate it. So this first screen just simply shows what that annuity is going to look like. So here's the $50,000. Here's the interest that it's going to accumulate, and here's what they have at the end of the year. So at life expectancy, which for a 70-year-old is 13 years, they've got a whopping $54,000, a little bit more than that, from their original $50,000 CD. So instead, let's talk about buying life insurance. So if they put that money into the policy we've been talking about, they would immediately have a benefit of $76,115. That's the life insurance benefit that they would have. Remember the long-term care benefit as well. Now, if you have folks that really, really, really want long-term care and that's more important than life insurance, we have a different single premium product that we can talk about. It's designed for more long-term care, less life insurance, a little bit harder to qualify for. But if you have clients looking to maximize their life insurance, but still have some of the long-term care benefit, then this is a perfect policy. So we can take that $76,000, we can use 90% of that for long-term care if they qualify. So that's about $65,000 or so, much more than the $50,000 in the CD that they currently have. So we can look at the snapshot here, and we can see, again, just a different way of explaining to this. $50,000 in the CD equals about $54,000 at life expectancy. We take that money, we put it into a life insurance policy. It buys a $76,000 life insurance policy. So their heirs inherit 41% more by putting that money into life insurance. We can also click on the, I think it's the print button or the calculate button. It'll actually print out and of course I just got an error because I clicked two of them, but it'll print out a report that actually shows that concept in a little bit more detail that you can actually hand out to them. So the software is not fancy because the concept is so simple. You really just put in a couple of key numbers. It tells you how much how much the CD is going to be worth, and it tells you how much life insurance is going to purchase. It can do the same thing for the IRA, and for the IRA, it's going to get a little bit more complicated because it will look at the RMDs, taking money out of that, the tax repercussions of death of owning an IRA. So it goes into a little bit more detail when you actually are using an IRA because it gets a little bit more complicated because there's actually more reasons why they should be moving the money into life insurance if they have an IRA because of the tax issues of owning an IRA upon death. So again, real simple concept. It's not complicated. It's real simple. But again, agents are just not out there talking about this. And I really believe if you've got a senior client, you can call them up today, and in 15 minutes, you can close this case real simply, real simply. So that's pretty much it. Simple concepts. I don't want to complicate it more than I have to. Anybody can go out there and sell it. I don't think it takes more than what we just talked about today. We do have materials on the website that you can print out and hand to your clients. We've got that software we can get to you. You can print out something, send it to them via email or do it right when you're sitting down with them and show them the power of this very simple concept. So I've unmuted everybody's phone. So if there are any questions, this would be a perfect time to ask them.
what are the tax consequences of from moving qualified money out of an IRA into this product?
Well, if you move the entire IRA funds into this, then you're obviously going to have some tax issues. So you're going to have to pay tax. Once you take money out of an IRA, it becomes immediately taxable. So one of the concepts is, instead of actually taking the entire amount out, leave that in. But if you have clients that actually have a required minimum distribution in RMD, they're going to have to take that money out. They're going to have to pay taxes on that. So now we can take that money and we can actually put that into the life insurance and not worry about the tax issues, because they were faced with those tax issues regardless. But we can also look at this on an after-tax basis. So if they take money out of the IRA and they do pay the tax on it, and let's say that they don't have to pay a penalty tax because they're old enough to avoid that, but we're now buying life insurance. So, even if they have to pay, 40% in taxes, depending upon how much life insurance it purchases, they might still be better off by going ahead and surrendering the IRA, paying the taxes due, putting it into the life insurance policy, and getting that death benefit. It really depends upon their individual situation, but the software will actually do that calculation for you and show the comparison of keeping it into the IRA and pulling the money out and putting it into the life insurance policy.
All right, thank you.
Other questions? If you have any questions, just throw them out there. Again, let me talk about the banks for one more second. And I really mentioned that. Banks are doing a great job selling life insurance, but they're not doing very complicated sales. They're selling term insurance. They're selling annuities. They're selling single premium life. They're selling this product. In fact, the particular product that we're talking about is the number one product being sold in banks and credit unions across the country. That's how popular of a product this is, and that's how easy it is, because the folks that are selling it, for the most part, are not as experienced as the people that are on this call. Most of the folks selling life insurance at banks do not have the experience of that independent advisor or independent financial planner or investment advisor. They just don't have that kind of experience and training. But they're selling literally millions of dollars every single month with this product. It's the number one product in banks across the country. There's got to be a reason for that. Any questions? Doesn't surprise me, because, again, this is a very simple concept, but it's a very, very powerful concept. And I really do challenge you guys to go out and make a couple calls. I guarantee you, if you can have a 5-minute conversation with a client, and you can walk away with an application and a case sold in just another 10 to 15 minutes. It's so simple. There's no reason that you're not talking to your clients about this. You're doing them a huge service if they have those, dusty money sitting aside. They don't plan on using it. They want to give it away to their kids. They want to give it away to their grandkids. Help them move that money into something that's going to actually create some wealth and provide some additional protection to them in case of that uncertainty of long-term care needs down the road. So Jessica in our office will probably be following up with everybody today or tomorrow. I know that she has to go out of town on Friday, but she'll be doing some follow-up today to see if you guys have any questions, get you whatever material you need. I don't guarantee a lot of things, but I guarantee if you talk about this, you're going to sell a ton of it. It's simple. It's effective. I love the concept. I really believe it's the easiest life insurance sale that we can make. We're just taking money from one pocket, moving it to another, but we're doubling it pretty much at the same time. So I appreciate you guys joining us. We'll be doing webinars probably every month, different concepts that you can take to your clients, along with all the resources and material you need to support those client sales as well. If you want CapTran, talk to Jessica. It's downloadable, but not on our website. She'll send you the link. With that, thank you very much and have a great day.